Well, let's talk more about the debate over student loan relief. Joining me now is Mark Kantrowitz. He's a student loan expert and author of titles such as Secrets of Winning a Scholarship. Thank you so much for joining our program today.
Thank you for having me.
Well, let's talk briefly about these cases. What essentially are the arguments on both sides here?
There were two cases before the U.S. Supreme Court. One involved a student loan agency called MOHELA that is in the state of Missouri, which services loans in the direct loan program. And the argument is that if federal student loans are canceled, their loan volume would decrease, therefore their servicing revenue would decrease, and the state was arguing that the revenue provided to the state would decrease. The other case is in Texas, where the plaintiffs argued that the President's Student Loan Forgiveness Plan did not give them the opportunity to submit public comments to urge for changes in the plan that would make them eligible for forgiveness or increase the amount of forgiveness that they would receive.
I want to put this in perspective, especially for our international viewers. Growing up here in the U.S., we know, both of us know how expensive higher education can be in this country. Give us a sense of the average cost of higher education here in the U.S. compared to other countries, and why have those costs become so high and continue to become so high?
Well, the most critical thing is the average cost in student loan debt for a bachelor's degree is about $30,000. So more than 2/3 of undergraduate students who graduate with a bachelor's degree graduate with student loans. The students who drop out of college are 4 times more likely to default on their student loans, even though they have less student loans. And part of the reason for the increase in debt is that government grants have not kept pace with increases in college costs. So that forces families to either borrow more or shift their students' enrollment to a lower cost college, such as from a private college to a public college, or from a 4-year degree like a bachelor's degree to a certificate or an associate's degree, which are 1- and 2-year degrees.
Yeah, and certainly compared to other countries, our costs are much higher, particularly in some countries where university education is free. So let's talk about the short and long-term impact of these costs on students. I imagine one of the effects would be when students get that first job and their job doesn't pay so well, they have a hard time keeping up with those loans. Would you agree with that?
Right. If your total student loan debt at graduation is less than your annual starting salary, you can afford to repay your student loans in 10 years or less. But if you graduate with more debt than your annual income, you're going to struggle to make those loan payments on a 10-year repayment plan, and you'll need an alternate repayment plan like extended repayment or an income-driven repayment, which stretches out the loan repayment term to 20, 25, or even 30 years. That reduces the monthly loan payment, but increases the total amount you pay over the life of the loan.
One thing we're looking at is this decision that will ultimately come. So what's next in these cases? From what we saw today, it seems that the conservative justices are skeptical of this plan from Biden. So what are the options here if that does go through, that particular decision against his plan? What are the options for Biden and the Biden administration?
Well, we will probably get the decision towards the end of the Supreme Court's term, probably in June. About half of last year's opinions were issued in June, the rest throughout the term. And since this is a more complicated case, I'm expecting it to take longer. Now, repayment of federal student loans is set to restart 60 days after the court issues an opinion, probably on the 1st of the following month. And the students have been 3 years without having to make a payment on their student loans because the requirement to make payments and the interest were suspended during the pandemic. Now, the president has said that he will end the national emergency declaration for the pandemic on May 11th, and so that may end the ability to have a payment pause and interest waiver. Now, borrowers have options for financial relief if they're unable to repay their loans. They can choose an income-driven repayment plan, which bases the monthly payment on a percentage of their income as opposed to the amount they owe. There are also deferments and forbearances like the economic hardship deferment and unemployment deferment, and also general forbearances that can suspend the repayment obligation, in each case for up to a maximum of 3 years, although interest may continue to accrue and will be added to the loan balance if it's not paid by the borrower.
A lot of people watching this decision, and the impact is great for a lot of students here in the U.S. Mark Kantrowitz, thank you so much for your time, sir.
You're welcome.